Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of financial updates with me, Shikhar Garg. And what an overwhelming end to the week we are about to see. I mean, the major indices in the US markets declined sharply, erasing all of its gains posted immediately after the Fed meeting. The Dow's decline was its worst daily performance since 2020 October. Investors majorly are led by the belief that the factors leading to high inflation are not going away in a hurry, and particularly the supply chain issues to have worsened over the last 1 month, majorly on the backdrop of the widespread lockdown by China. Now, these are the kind of fundamental updates that we are talking about, and I will be going through further some more updates. But before we go ahead, I'd also like to bring forth that we are having a technical session by the end today. So stay tuned. On the fundamental side, coming back, a perception that Fed will have to continue hiking by hefty measures to rein in the prices pushed up the benchmark bond yields to a new high. 2-year yields at 2.75, 10-year at 3.07. These are the levels that we have not seen over the last 4 years. This fall in stock and bond prices is now driven more by the bearish sentiment than anything. Despite Powell rejecting a 75 basis hike, recent poll suggested that 91% probability still exists for a 75 basis point hike in the next FOMC. Fears of recession, as the Bank of England suggested after it hiked rates earlier in London, also added the depressed mood. Now, this is kind of a rare situation, what we are seeing with a sell-off in both bonds and stocks. The former due to huge position and unabated inflation, and the latter due to the fear of recession. Any economic news from Germany, UK, or US is not enough to lift the sentiments, and the dollar juggernaut resumed its big stride yesterday amid safe haven demand and retested the 5-year high of 103.94. On the rupee front, we are seeing rupee made gains initially on the back of a dollar correction, but huge demand near 76 pushed it back to 76 half levels. And any expectations of move on the downside was squashed by the buyers immediately. All eyes are now on RBI, who has so far been actively preventing weakness in the rupee beyond 77. The big question is how long will they keep and the rupee stable and the overwhelming surging bullish dollar environment. So these updates may be good for the fundamental side, but we need more crisper levels. So Nikunj, can you tell us what exactly should be the levels with respect to technicals?
Yeah, sure, Shikhar. So welcome everyone to the pictorial format of financial markets, which is known as technical analysis. So starting with dollar index, yesterday we saw dollar index again resuming its uptrend at 103.5 to 104 levels. So 104 is a very strong resistance point, which we have seen as a previous high in January 2017. If at all dollar index has to reverse, it will reverse from these levels and possibly will move again down towards 100 and sub 100 levels. But at the same time, if on monthly closing basis, if it is closing above 104, then possibly we are even moving towards 106 and 107 levels. So this is the level to watch out, whether it is sustaining 104 or it is surpassing that. Once it is below that, possibly we'll have some consolidation and again dollar index falling towards the lower side. Talking about euro dollar yesterday again moved down. Again, it was just because of dollar index. Right now it is trading at 1.0534, but at the same time we are of the view that if at all it jumps to 1.06 level, possibly that is a good level to go short, and maybe we'll see euro dollar falling to 1.04, 1.0450 levels. GBP USD yesterday moved more than two big figures. Right now at 1.2367, made a low of 1.2330. Possibly 1.2450 is a good level to go short, and ideally we believe that 1.2250, 1.2230 can be seen soon. So as of now, all emerging market, all majors against dollar are depreciating. Any upticks will be considered as an opportunity to go short. Coming to our mother currency, the Indian rupee against dollar. Yesterday it closed at 76.25, and right now the NDF markets are quoting at 76.62. The next level to watch out for exporters is 76.95, 77.10 levels. At 77.10, we'll see more stop loss getting triggered, and maybe it will slide to 77.5, 78 levels. If at all it has to move down, 77.10 should hold, and possibly we'll see 76.25, 75.80. So importers should watch out for 75.80, 76 figure levels. Exporters can wait for 76.90, 77 levels. But yeah, 77 will act as a very strong barrier. Easily it will not surpass. So this was all from my side.
Okay, wonderful. It is always said to have a better mix of macros and technicals to be much more better when it comes to risk management. And current times definitely need risk management as the overwhelming moves continue to happen. So, folks, I hope risk management is again at priority. We'll see you again on Monday. Have a good weekend. That's it. Thank you.